And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA CIB, recognised by Euromoney Cash Management Survey 2024 for pioneering cash management solutions for their clients. Good evening. Welcome to the programme. I'm Stephen Grootes. Well, I've been watching the situation around gyms in a very strange way, and let me be very clear. I've been watching it outside the gym, so as an observer. And I say this, we'll speak to the CEO of the investment company Grootes tonight, and Virgin Active is a big part of their portfolio. I can't tell you when I last went to a gym, because I think like many people, I felt when the pandemic started, I was going to do other things. There's a long road cycle race this weekend, for example. But plenty of people I've been speaking to have told me, anecdotally of course, so this is not scientific, that they don't go to a gym. I know plenty of people who do. And I wanted to ask you, essentially, what are you doing at the moment? There's 635 people who are active members of Virgin Active. There are other chains, of course, that compete with them, that they'll have large numbers of people who go to a gym as well. And I did wonder, and this is really a pandemic recovery story, some things, for some people, changed after the pandemic and they never went back. And I would count myself as one of those when it comes to going to a gym. Some people did go back, and some people, I would suspect, did not belong to a gym before the pandemic and afterwards thought, actually, I'm going to go and do that for whatever reason. And I'd just like to know where you fit. We'll talk about the economics of gyms and the gym business. I mean, in some countries now, the gym business has gone so sort of super high tech. There's so many facilities there. People have lifetime memberships. People have memberships that are worth thousands of dollars a year. And they're snapped up because of the facilities that are on offer. And I suppose also because people and businesses are looking to retain talent. And I think in some places, that's a big part of what's happening. We'll talk about the Chinese stimulus in just a moment. I mean, it seems to me almost every second or third day, there's another announcement from Chinese authorities all about trying to stimulate their economy. Today was the tax incentives for home and properties and land to try and stimulate transactions there. We'll get an opinion from John Stopford as to whether or not that's working. And of course, hanging over all of that is Donald Trump. And then somewhere we need to talk about Bitcoin, past $90,000 today. I mean, the rise in the value of Bitcoin following the re-election of Donald Trump as president is just extraordinary. I mean, it's something that people are going to be talking about for some time. Now, I don't know, you know that I'm not, but are you one of those people who sits there on their phones trading cryptocurrencies? What's that been like? Have you always made money? Have you lost money? We've heard from some people who say they've always made money, but have you ever lost money? And this is really a cryptocurrency story and part of a big change, I think, in our economy. And of course, what I don't get and what no one has yet been able to explain to me, and maybe there are people that we can still ask, will explain it better to me, as why Trump would make such a big difference to the value of Bitcoin. What is it going to be in his power to do that it makes the investment worth it? I'm not clear on that at this point. 011 883 0702 021 446 0567, and of course voice notes tonight on 072 702 1702.
702. Stephen is on The Money Show.
6 to 8 p.m.
Well, over the last few weeks, there's been a lot more news about the Chinese economy. We've all been watching the situation in the US with the re-election of Donald Trump as president, his promises of big tariffs on China. The Chinese economy, as you know, has a big impact on us. It has a big impact on the JSE every day. And its authorities have been implementing a major stimulus in different ways over the last month or so. Today, it was a new incentive on home and property sales. On Friday, it was a $1.4 trillion debt package for local government. John Stopford is the head of multi-asset income at NinetyOne Asset Management, on the line now from the UK. John, good evening to you and thanks for your time. I really appreciate it. We've seen several measures now being implemented in China. I mean, almost twice a week there's another new announcement of another new measure. Is this making a difference to their economy? Is it solving some of the underlying problems that they very clearly have?
I think it's addressing some of the balance sheet weaknesses associated with a deflating property market and the impact that that's having on the wider economy. We and others, I think, feel that it's mostly about shoring up growth rather than creating sort of new momentum. So I think the thing that's missing so far is direct stimulus for the consumer, and that has the lack of that has disappointed investors somewhat, I think.
Why no direct stimulus? Is this because they're waiting to see what Trump does?
I think there are a couple of things. So yes, potentially. So we don't know exactly what Donald Trump will do. He's raised the possibility of very significant tariffs on Chinese exports. Clearly, he's appointed some fairly hawkish people with regards to China into his prospective cabinet, so his Secretary of State and so on. So it looks as though he's going to take a fairly hardline view towards China and China trade. And so they may be holding back a bit from that. I think also, they are reluctant, I think, to hand out money to consumers, which is possibly what the market would like to see. And they want to focus on sort of longer-term structural issues. So whether they do anything, we'll have to wait and see. But perhaps some of it is holding back a little bit in reserve to respond to Trump when they've got a clear idea of what his plans are.
Their main problem, you'll understand it better than I, seems to be stimulating demand, and this is about trust. As I understand it, many people in China have money in savings, and they're not spending that. Why is trust such a big problem? Has something fundamentally changed with how people in China are seeing their own economy?
Well, I think at various points. So there isn't a sort of traditional safety net for people if they lose their job or when they retire. They need to save for those eventualities. And they've been encouraged in the past during different growth models to invest in property, to invest in equities, and so on. And then policy has changed. And as we've seen with the property market, that basically was a bubble that's now deflating, and so lots of people have lost money. And so there's a reluctance, I think, to follow, to repeat that, both in terms of policymakers, but also in terms of consumers and savers. And so consumers are sitting with savings, and they're not sure what they're worth, how easy they are to realise. The economy is not doing particularly well because of the sort of decline in the property market and the related impact of that, the reduction in spending on construction and so on. And so you've got a situation where consumer confidence is depressed, and as you say, their trust in or the reliability or the visibility of government policy and what that implies for different savings instruments, that's taken quite a battering. So something, I think, needs to revive animal spirits, revive confidence in the economy, and so far it's rather lacking.
And I presume that Trump really doesn't help, because you don't know what's going to happen next. The EU also has some tariffs against China. Essentially, this means that China is caught in quite a difficult space. It requires quite clever navigation, I would imagine.
Yeah, absolutely. So one of the things that China's been relying on to create some growth is producing more stuff. And because there's not a lot of domestic demand, they're then exporting that stuff. And so Chinese exports, the trade balance, have done pretty well and have supported the economy, at least in real terms, in volume terms. Pricing has been pretty soft because there's just too much stuff being absorbed, so they're having to cut prices to sell it. So they're relying very heavily on exports or net exports as a driver of growth. And clearly, all that's probably doing is winding Trump up more about the need to impose tariffs and reset the playing field more in favor of US manufacturing and US producers.
Trump, when he comes into office, and if he follows through on his threats to impose severe tariffs on China, and as you point to, of course, he's made several hawkish appointments already, Beijing would have to react. I mean, they couldn't just sit there. They have a domestic constituency they would have to respond to. I imagine someone in Beijing is gaming this out very carefully.
Yeah, and I'm sure there's a lot of it a lot of gaming, as you say, going on. I guess clearly, the US runs a trade deficit with China, so China potentially has more to lose in this. The US economy is a more closed economy. It is, it's got other sources of growth, so it's probably less impacted. The issue for the US economy and the US consumers is tariffs are essentially a tax increase. They tend to hit the consumer or the businesses that import, and so they tend to potentially raise prices because, effectively the cost of buying stuff goes up. They tend to hit demand, and given we've just fought an election where probably the biggest issue was the cost of living, I think there's a question mark probably about how aggressively Trump will actually follow through on these tariff plans. So he's called himself the tariff guy, but he also, I think, doesn't particularly want to, damage or push prices up materially further. So there's a trade-off, and whether this is more about a negotiating position or whether it's something he really means to follow through on is less clear. The other thing to consider is, he wants to cut taxes more generally, and some of the funding from that is meant to come from raising tariffs. So, again, if he doesn't raise tariffs, then there's a question mark about how he funds those tax cuts and what happens to the US budget deficit. So there are lots of moving parts. Some of this is definitely a negotiating position. Some of it will happen, I think, and it's about how the balance between those two factors and how they play out.
John Stopford, really good to hear from you tonight. Thank you very much indeed. Head of Multi-Asset Income at 91 Asset Management.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
While all of that's happening in Beijing and Washington, and all of it having an impact on us, the annual COP conference about climate change, the climate change conference underway in Baku in Azerbaijan. Various groups, our government represented there as well. For various reasons, this year's COP, or Conference of the Parties, is being referred to as the Finance COP. Catherine Robinson is the head of campaigns at Natural Justice. Catherine, good evening. I mean, in the end, fighting climate change is about money. It's about investing the right amount of money or the right amount of capital in the right place to try and ensure there's a transition and as just a transition as is possible. So if that's the case, why is this year's event being called the Finance COP?
Hi, Stephen. Thanks. Well, this is going to be the first time in about 15 years that countries will reevaluate the amount and type of finance that developing countries should receive to pay for climate action. And this is since the 100 billion annual target was set in 2009, which wasn't science-based nor was it needs-based. And this target was one that the world's developed countries and the world's wealthiest nations, those most responsible for the climate crisis, have consistently failed to meet. So this year is about coming up with a new collective quantified goal, otherwise called the NCQG. And it really is a critical opportunity for developed countries to fulfill their legal and moral obligations under the Climate Convention and the Paris Climate Agreement. And this is really about providing the means of implementation and enabling developing countries to phase out fossil fuels, to mitigate climate change and adapt to the disproportionate impacts of climate change.
If you look at the situations in some of the richer countries, the US, China, the UK, the EU, they all have their own quite deep economic problems at the moment. And I mean, of course, the situation in Washington now is very complicated. To be blunt, Catherine, despite what promises they've made or commitments they've made, do you think they're going to reach into their own pockets to actually help other countries?
Well, that's the critical question. It really is about political will, because there's plenty of money for wars and genocides, but not enough money for climate action. And really, this is, like I said, a legal and moral obligation under the Paris Climate Accords and based on the principles of equity, historical responsibility, and common but differentiated responsibilities. So if the global north and developed countries really do care about human rights, justice, and democracy, they really need to put money where their mouths are this year and reach into their pockets and pay for climate finance, because it's not about charity. It really is about climate justice.
Sure. I mean, I hear all the moral arguments. I just don't know if they see it that way. And if you look at how angry some of their constituencies are, if you look at the situation, I think, frankly, Catherine, to be blunt, I think with Trump, I just don't see it happening. And where does that put the rest of the world? That's a huge problem.
Yeah, absolutely. It is a huge problem. And, with Trump under his previous presidency, he pulled out of the Paris climate agreements completely. And of course, this means that, despite them pulling out of the Paris climate agreement, they also renege on their responsibilities under, international law. The reality is with the United States, whether they're in the UNFCCC negotiations or not, they ultimately they're unraveling and derailing the negotiations, and not being very progressive on the negotiations themselves, and really acting in bad faith. So whether they're there or not, generally it doesn't bode well for developing countries. I think what's critical is that global South countries and negotiating blocs like G77 plus China, which mobilized yesterday, basically in unison did reject the finance text that was put on the table. It was unbalanced. It was inequitable rather. And they're essentially saying this is not enough. We want at least $1.3 trillion per year of grant-based finance to help the Global South cope with the climate crisis that they did not cause. So they really are calling for grant-based finance that is not debt-inducing, because the Global South is already facing unprecedented debt crises. Sure. So it really is up to the Global South and civil society organizations to put pressure on their governments and to hold developed nations accountable to the Paris Accords.
Catherine Robinson, thank you. Head of Campaigns at Natural Justice.
The Money Show.
The Markets.
Owen and Komos from the Nkunzi Wealth Group. Good to see you again, Owen. Thanks so much for coming in. Results out from Grootes today. The total value of their investments up by just over 9%. A lot of it to do with the economics of gym memberships.
Yes, absolutely. Thanks for having me again, Stephen. Grootes business, I think, is made up of about 62% of Grootes business is all Virgin Active. In all the regions they operate in, South Africa, Italy, or rather Southern Africa, Italy, and a few other regions. That business makes up the bulk of what is inside Grootes.
It seems that the gym business is still quite strong. There are a large number of people who regularly go. They have active memberships.
Yeah, there is, and obviously they'll have the benefit of those members that actually join memberships and just let their money do the gymming instead of them going to gym. But definitely looks like Grootes is telling a story that's based around Virgin Active. But I think that when you look at the broad numbers across the group, the growth numbers are not very exciting. Growth levels of about 3 to 2%, or 2 to at most 4% growth across all the businesses that they've invested in. It doesn't say, hey, let's rush to buying Grootes. And obviously we know that in the broader picture of the company itself, they've done some recapitalization of the business. So it's not a business that is sexy as it used to be. Private equity can be very difficult sometimes, because then you are married to these big positions. If you look at Premier is also a big contributor there, but the margin of growth there is still very limited.
Naspers and Prosus, their stake in Swiggy, that doubled. That Swiggy had its Indian IPO today.
Yeah, Naspers, Swiggy listing in India today in Mumbai. Prosus has made about $2 billion from the time they supported it prior to listing to where the IPO landed today. It did vary quite a bit in terms of share price on listing, but it performed really well. And I think that continues to show that this thing called quick commerce, where people are using alternative methods to deliver food and deliver other services, is going to be a very big thing going into the future, particularly if you're looking at countries that have got big numbers, such as India, China, and America, etc., and some of the other emerging markets. But Swiggy has done well today. The listing today has brought the CEO out as well, who's apparently very shy in terms of talking to the media. But another very good investment coming out of the Naspers Prosus stable there.
And Tencent, also better than expected profits, 47%.
Yes, 47% profits coming out of Tencent. And again, Tencent though remains a very mature business. We must remember that. If you look at the other matrices, Tencent is not exactly a business that's going to give you very huge growth indicators. Looking at the other multiples that we analyze, but their profits up 47% odd. but it continues to do well in China. It's a very amazing business, that one. And I think the most amazing story about it will remain the fact that Kuspeka invested only about $21 million, and that thing is now over worth R1 trillion in valuation many years later. So it continues to be a good South African story, actually.
The oil price down today, or nearly at $70, in fact, and it's been heading down the last couple of days. Some suggestions it could actually continue to plunge, that OPEC might unwind voluntary production cuts.
The oil conversation, Stephen, is a very complicated one. It definitely has been pulling back. It's come all the way from above 80, but it's not managed to go below supported $70 a barrel. I think once it does that, you'll probably be looking at another $10 below that to 60. But then again, OPEC is OPEC. They'll tell you one thing and they'll do another. I do think that oil will still find support. We might be talking a different story, in my view, when it comes to oil in the next 5 to 10 years, because of the conversation around EV vehicles and everything else that we're talking about when it comes to using alternative sources of energy, because we're trying to save the universe, etc. But at the moment, I think that oil price 70 is a very special level. It's big support there. If it breaks that, I think we could see more downside. But at this stage, I think OPEC can always control the price by coming in next month and saying we're going to cut production and oil price is going to go back again.
I mean, it's fascinating. You could have lower demand because of EVs and at the same time more supply because Trump is one of those who would say, drill, baby, drill.
Exactly. So it's going to be interesting what Trump does once he's in charge. But right now we're actually trading on the back of the fact that we know what Trump did last time when he became president. And drilling was one of those things that he forced at quite a bit, and making sure that the world starts to see a lot more American oil than the Middle Eastern oil. So it'll be interesting what happens on the share in the markets as well.
Owen Nkomo, thank you, CEO, founder of the Inkunzi Wealth Group, bringing the time to 6:30.
The Money Show
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, I asked a few moments ago for your thoughts about cryptocurrencies, and particularly because Bitcoin has gone past the $90,000 mark in the US. And I've asked the question, what is it that Donald Trump could do as president that could really explain and justify the dramatic increase in value that we've seen in Bitcoin? Some responses coming through this evening on 072 702 1702.
Evening, Stephen. So, with regards to Trump, right, and the correlation with Bitcoin price, it has to do with the fact that he is surrounding himself with what Silicon Valley calls the crypto pros, right? So this is Elon Musk and Peter Thiel. So these are guys who, are big on the crypto investment space, big on crypto coins, creating coins, etc. So I think by consequence then, the market is receiving Trump's winning as now crypto has a voice in the government. So, any laws that may be required to be passed to make sure crypto is finally legitimized, that is why the price is rallying.
All right, thank you for that. Other voice notes on this as well tonight.
Stephen, hi. The rush for cryptocurrency, specifically Bitcoin and Dogecoin, I think comes from what Trump said during an election rally where he was referring to the US federal debt, which is something ridiculous like $38 trillion. And he mentioned not giving away the hard-earned cash connected to the gold value and the gold system, but rather to write them a cryptocurrency check for that. And I think that, and the fact that Elon Musk is walking very closely to him, and Elon Musk is involved in Dogecoin as well, both of those factors have now resulted in people rushing for cryptocurrency and buying specifically Bitcoin and Dogecoin. I myself buy little bits, can't afford to buy a lot. Wish I bought Bitcoin when it was 2 cents 12 years ago. If I bought just 1 rand of Bitcoin 12 years ago, I would have been retired on an island at this stage. Happy show. Have a good one.
Thanks very much for that. I mean, I understand all of that. I still don't understand what power Trump has to justify the dramatic increase in the value of cryptocurrencies. Business and government have joined forces to help build SA. Discover how with insights from SA's top CEOs, brought to you by B4SA on 702.
The Money Show
with Stephen Grootes.
Well, the private equity firm Grootes reporting today the total value of its investments increased by just over 9% to just over 16.5 billion rand in the 6 months to the end of September. Its net asset value per share has more than halved. There was that big recapitalization back in June that doubled the number of its shares. Grootes has big stakes in Virgin Active, the British fashion company New Look, the consumer food group Premier. We spoke to them yesterday. Peter Hayward-Butt is the CEO at Grootes. Peter, good evening. Thanks for your time tonight. Look, a very interesting period for you, a complex period perhaps, but in the end your investments are up 9% in the period. Are you satisfied with that?
Evening, Stephen, and evening to your listeners. Look, it has been a very transformational 6 months, to be honest. As you mentioned, the recapitalization, which included an extension on the convertible bonds and the exchangeable bonds, 1.5 billion rand rights issue, all of that to give the business the runway to monetize those assets that you mentioned. And those assets have performed well, particularly Premier, who you spoke with yesterday. I'm sure you chatted to Grootes, who's had a fantastic run. Share price has performed well. But, Virgin Active really has, come through the dark days of COVID and really is starting to perform fantastically well under Dean's leadership. And, the one probably laggard in the portfolio is New Look, which is a fashion retailer based in the UK, which, as anybody knows, is not probably the easiest place to be playing at the moment. So, broadly happy. I mean, you'd always want more. I'm sure people do. But, overall, it's been a good result.
I want to just focus on gym memberships for a moment. You have around 630,000 members in Southern Africa. During the pandemic, of course, major problems. I made the point at the start of the show, I think some people who used to belong to a gym don't. They do other things for exercise, mountain biking, or they say they do, whatever it is. Some people may never have been to a gym in their lives, but after the pandemic decided actually this is what they were going to do, and they would have walked into one of your branches. As things stand in South Africa, do you think there's still a lot of space for growth in the gym business?
No, absolutely. I mean, we could talk about South Africa, but I think it's a global trend. Wellness coming out of COVID really is a focus of just about everybody. We're seeing a younger cohort of people taking health and wellness seriously, and gym is one part of that. And I think the whole thing about Virgin Active is moving to what they call a wellness strategy. So it's not just about the bricks and mortar of coming in and pounding the treadmill, but all the things around that, nutrition being one of them, advice around that, and a whole lot of different things, and making it a social place that you want people to come. There was an article somewhere I read, of Dean may have sent it to me the other day, saying the Gen Z people are more likely to go to a gym than go to the bar, which probably means we're not in Gen Z. But I think that is genuinely what we've seen happen. We've got a much younger cohort of people coming, and I definitely think South Africa is in a great place to continue to grow that whole trend, not just in gym, but the whole wellness space. And it is globally as well, to be fair.
No, Sean, of course, if they start with you young, they'll stay with you for a long time as well. Talking of health and wellness, the Kwai food chains specialize in healthy fast food. I imagine still potential for growth there.
Yeah, I mean, anyone who's sort of looked at the numbers, I mean, it's had a fantastic year, since we integrated it into the Virgin Active Group probably 18 months or so ago. Over the last year, it's increased revenue by about 66% year on year. We've rolled it out not just in just about all of our gyms in South Africa, but we're starting to do that in the UK, and now increasingly in Australia, Singapore, and even in Italy. So, yeah, we've seen great growth out of that business, and it's just part of the whole wellness offering, being able to offer a healthy nutritional supplement to gym goers is something that we think is part of the parcel of running a wellness group.
You talked about the New Look fashion chain, and obviously big issues in the British economy that will have a big impact, and particularly on a fashion chain, particularly an era of fast fashion as well. I don't see the British economy necessarily recovering for a while. There's a difficult situation. There is a new government. They seem to be doing what they can, etc. Your outlook there for that particular business in a very difficult economy, how worried are you about it?
Yeah, look, I mean, for us, it's about 5% of our net asset value, so it's pretty small in the greater scheme of things. But that having said, it has gone through. It's a tough place to play at the moment. Being a retailer on the high street in the UK is not an easy place. Weather's played its part. Anyone who's been to the UK over the last year or so, there's been a lot of unseasonal weather, which doesn't help a retailer per se. And I think your point's well made. We're not yet seeing the green shoots of recovery that we would have hoped we would in the consumer in the UK. Interest rates are starting to come down there, to be honest, and I think there's likely to be another cut relatively soon. That will help get more money into people's pockets and hope to get people spending more. I think the problem with the government at the moment is just the policy uncertainty. They increased national insurance, much more than people believe and reduce the threshold, and that will have a massive impact on businesses, including New Look, who are trying to survive, let alone thrive. So it is a tough environment. We don't see massive change in the next 12 months or so. We'd be hopeful there would be, but I think it's still a journey to get the consumers back into a positive frame of mind.
Peter, thank you very much indeed. Peter Hayward-Butt is the CEO at Brate. They're announcing their results tonight. Just interesting to see how he's quite optimistic about what's happening in the gym business. I don't know if you've noticed that difference. Younger people going to gym rather than older people. 011 8830702 021 446 0567.
The Money Show with Stephen Grootes is brought to you by Absa CIB, pioneering cash management solutions for our clients, as honored by Euromoney Cash Management Survey 2024.
6 minutes now to 7 the time. Well, confirmation last night, another of our wineries winning big awards. This time, 2 big awards at the International Wine and Spirits Competition. The winery, it's Villafonte. Its owner is Mike Ratcliffe. He was at the awards in London last night. I wonder how he's feeling this evening. Mike Ratcliffe, good evening to you. Congratulations. Must have been a very big night last night.
Hi, good evening, Stephen. And yes, thank you. It was very proudly South African moment. The flag was flying very high, and it was a late one.
When you win awards like this, does it help much with the selling of your product? You can put a sticker on the bottle and probably for quite some time. In some ways, though, I suppose what it does is it makes your product and your name a lot more visible.
It's certainly, being an international wine and spirit competition, this is definitely the big dog in the room. So it's, I guess, the one to win. At the end of the day, though, I really think that this is about building the category of South African fine wine, and specifically the top end, the fine wine category. And so I think this will have a much bigger effect than simply selling more of my wines.
I suppose in particularly the British market, because it's so close to France, in the fine wine category, France is really the person you have to play against.
Yeah, the French have been at it for a very long time. They do a very good job. I enjoy a bit of French tipple from time to time. And ultimately, I think it's because it's an international competition, you're playing against the whole world, and the playing field has changed significantly over the last 20 or 30 years. France is still the big dog, but the rest of the world is yapping at their heels and in some cases catching.
The quality of South African wines, obviously you won awards last night. You would say they compete well. Has the quality of our wines changed at all? Has it sort of caught up in some ways?
Yeah, that's a great question. I think that certainly from our point of view, we're very proud to be part of a fast-growing contingent of top South African producers who, even 10 years ago, it seemed inconceivable that we could take on the big boys, but there are a growing number of 20, maybe even 30 wineries now who are taking on the big boys in the world and winning. And just one final comment on that. I don't think South Africa is trying to mimic the rest of the world. There is a South African style of wine which is starting to emerge, which is, if you use the rugby metaphor, similar to our style of rugby, which doesn't mimic anyone. We're creating our own rules, and I think we're playing by them, and in many cases winning.
What's changed then? Is it that people have become more used to our wines? You do need to develop a taste sometimes for something, and this would be a good example of that. Do you think that maybe our wine makers have upped their game? Has something changed with the way we handle the grapes? Are we just producing a better product than we were 20 years ago, I suppose is what I'm really asking.
I think it is across the board a better product. Without getting into too much detail, we have got better across the board, but I like to use the word confidence. I think that for many years, South African winemakers were apologetic, trying to catch up, trying to match the greatest in the world. And now with this new found confidence. There are so many producers who are saying, actually the terroir and the climate of South Africa is unique. The grapes that we have in South Africa, the way that we express them is unique, and we're not going to copy anybody. We are going to give you the best South African wine possible.
It's a funny thing that, I've always wondered about that. I think many South Africans go to London and just feel less confident than we should. And often, as we'll discover again this weekend, we'll go to London and win. I must ask you about the vines back in Stellenbosch, a part of the world you know very well. Many people are worried about climate change. Is that going to have an impact on your terroir? Is that going to have an impact on our industry over the next few years? We're probably going to be more affected by climate change than some of the other wine-growing regions of the world.
I think it's something that everybody really needs to take very seriously. Climate change is real, but there are very tried and tested techniques which can be implemented to mitigate against climate change. Of course, these things take time, energy, focus, and sadly, a lot of money to do. But a lot of people are worried about the extent of vines that are actually being uprooted in South Africa. And in many ways, it's Darwinian in the sense that, vines that are unsuited to our climate over time will need to be pulled out, and new areas will need to be discovered where it is more suitable. So, yes, we are in the middle of a big change. But I think South Africa is handling it possibly even better than many other places in the world.
Mike Ratcliffe, thanks very much indeed. Owner at Villafonte, and of course the proud winner of 2 of the awards from that big event last night, the International Wine and Spirits competition yesterday evening. I don't know how you've been feeling about everything that's changing in the world. We were talking about Trump a little earlier. We'll actually focus on how companies manage change in the next little while. Also, coming up, we'll be talking and we'll speak to Wendy Nola, your consumer ninja. She's got a great story about something that happened to someone who had been renting a car, and just ahead of the festive season, something you really just want to pay some attention to, the small print when you rent a car from a rental company. And then, of course, don't forget your shapeshifter this evening, someone who's really changed the game. We're talking to Duncan Pieterse. He is the Director General in the National Treasury. Really looking forward to that. Good evening. You with The Money Show. It's 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA CIB, recognized by Euromoney Cash Management Survey 2024 for pioneering cash management solutions for their clients. Good evening. Welcome to the second hour of the program. We'll talk about navigating the chaos. I think this was decided before we spoke about what happened in the US elections. We'll be talking about that with Sipiwe Moyo, the organizational behavioral specialist, in just a moment. And then Wendy Nola, she's got a cracker of a story as your consumer ninja about something that happened to someone when they rented a car. And legitimately this time, it really wasn't their fault. And they ended up paying through the nose anyway. You really want to read the fine print. And then I'm really looking forward to this. Not very often you get to do have a conversation with someone like this and have an interview with someone like this. Your shapeshifter this evening is Duncan Pieterse. He is the National Treasury Director General, one of those really tough jobs. A former Director General in the Treasury once said, I think it was at a press conference that I was at, said, this is a job you only do for 5 years. And it's one of the questions I'll ask Duncan Pieterse. This is a job you only do for 5 years. And if you consider the complexity of it, the difficulty of it, can you blame someone? But you can also change the trajectory of a country in 5 years with the right support, with the right politics, with things going in your direction, etc., etc., etc. So speak to Duncan Pieterse. Looking forward to that in about 20 minutes or so from now.
The Money Show.
Business Unusual.
So I don't know how you feel about recent events, the re-election of Donald Trump as president of the US. I can't help but feel a little, I suppose, uncertain that things are about to be, well, a bit chaotic. If you're running a company, you're working in an office, you're working with a team of people just trying to survive financially on the hustle, I think things could be unstable for quite a little while. Sipiwe Moyo is an organizational behavior specialist looking at navigating the chaos. Sipiwe, good evening. I suppose when we have moments like this, when, Bitcoin's past 90,000, the gold price has fallen through the floor, everything seems to be changing very quickly. Obviously, people sort of respond to this in different ways. And you actually have 2 major categories or 2 approaches in coping with this kind of turbulence.
Yeah, it's quite turbulent, Stephen, and good evening. I mean, if you take the political events, whether it's the elections in Botswana, South Africa, and in the United States, and many other countries, you can just see that we're living in times where change is really is a constant, right? And these are not just political events, but they shape the way organizations and individuals operate on a global scale, whether it's nationalism rising and all kinds of things. And for me, it has always been important to understand that when you look at coping research, researchers who study coping really tell us that there are really two things you can do when you are in these types of chaos that we're in right now. Firstly is what we call, I guess, problem-based or problem solution type of coping. In other words, let me see if there's something I can do to solve the problem. And secondly, if I can't solve that particular problem, I need to look within and say, what are some of the coping mechanisms that I can use in order for me to cope with the challenges that I'm having. And I think sometimes as human beings, we find ourselves being so obsessed about things that we cannot control. And it's very important sometimes to just look in the mirror and say, right now, as I'm sitting here, what is it that I can control and what is it that I can't control? Of course, there's something you can do to manage your own emotions. And I find that distinction is very, very important in turbulent times like this, particularly if we all get a sense that there is no end in sight, right? That this change and turbulence is going to linger for much longer. The idea that we are going through change and things will be stable is not true at all. I think we're living in times where we have to sit with that change, and therefore we need to understand how do we cope and even thrive in spite of that change.
I've often found, Sapiwe, that if there's certain things I know I can't control, and if I have, and I don't always, but if I have the wherewithal, if I have the ability, if I have the emotional self-control sometimes, just to sort out the things that I can control, I find that gives me the tools to control the next thing that I thought I'd never be able to control. Often that's about confidence. So if I can only, I can't control C, but I can control A and B. So I control A and B and I get good at that. And then I find actually, here's a way to manage C a little better. And it moves on from there.
Yes, because it frees you of both, I guess, emotional, but also cognitive bandwidth. So when you just think about what you can control and you do exactly that, and it feels to your mind and your brain, you've just solved something else, and therefore you have extra capacity to then look at C because you've managed to just tick something. And people must never forget, Stephen, that there is a sense of accomplishment and finishing stuff and achieving stuff also gives you a lot of confidence to then go and tackle that same thing. So I think your approach is really, really, it makes a lot of sense to say, all right, what I want to do now, let me assess control. Let me start by asking if the issue is within my control. And if I can solve it, I solve it. If I can't, then I focus on the emotion-focused coping. But then again, that relieves me of that emotional and also cognitive bandwidth to then try and then attack C, as you say.
It's happened to me, it does happen to me. You can be consumed by the emotion. You be angry, sad, 7 stages, whatever it is. How can you control that emotion to start on focusing the problem?
Yeah, I think firstly, if you're able to tackle the problem, you should try your best to tackle the problem. So I think this is not some wishy-washy kumbaya stuff of saying we must never ever try to solve any problems. Otherwise, for example, if I have a bad leader, no matter how many emotional regulation techniques you are giving me, at some point we must tackle the fact that everyone who reports to this particular person is experiencing stress and burnout and so on. So we have to go and speak to that leader and say, yes, we see the numbers are good, but everyone who reports to you is depleted. So this idea that emotional coping is not this idea that now we must never solve any problem. So we must still tackle the problems that we're able to tackle, but also it helps to also frame those problems differently. So I find, for example, When I break down problems into small palatable ways, it really helps me to not feel overwhelmed by that problem. So break them down, set clear goals so that it doesn't overwhelm me. But also, from an emotional point of view, once I've set those clear goals and I understand what I can do, celebrate some milestones. If you realize that you're having progress, celebrate some milestones and say, I'm not where I want to be, but I'm also not where I was. And that also injects a little bit of hope and optimism that at least I'm making progress. That sense of achievement is very important as you tackle problems long term. I think one of the mistakes that we make, we wait until we've achieved everything. And when we do that, we become so depleted because you are not really filling your emotional tank by ticking and celebrating your mini successes, which I think is very critical.
Are there practical examples? I mean, problem-focused coping that you can sort of take advantage of?
Yes, absolutely. I think problem solutions that the idea of solving problems also is, for me, just making sure that you realize that you don't have to solve all the problems by yourself. So tapping into your networks, whether professional or personal, is a right way of solving some of your problems. Find people with experience, people with knowledge that can help address your challenge. Many times there are people who are willing to help you at any given time. They are just a phone call away. For example, you get retrenched and unfortunately you get into that state where you're feeling both helpless and hopeless. But what is going to help you is start picking up the call or WhatsApp and telling people that you are in the market, you are looking for a job, you're on the market. That is a clear way, a practical example of problem-focused coping. I have this particular problem and I'm going to reach out to my network to be able to solve them. Also, just taking constructive action. So making small little adjustments and small headways into the problem that you're trying to solve instead of waiting until you have all the answer. If you are a leader, prioritize clear communication, which is very important. And I found this useful, Stephen, to say if people are going through change, the uncertainty is one of the things that is bothering them. And as a leader, one of the tools I found is that communicate what you know, but also if there are things that you know, but you are not allowed yet to say because of the organizational hierarchy, it's very useful to say, yes, there are things that I know, but I'm not able to share them yet because they will be shared in the next month or two. And that builds the trust of people to say, okay, because people can suspect you know already, and that erodes trust. So that little bit of transparency to say there are things I know, but I'm not able to share as yet.
Yeah, be as honest as you can sometimes, I suppose. Sometimes a situation can just feel completely beyond control. I mean, just completely. It just feels like everything is moving so quickly. I mean, how do you stay, sort of, I mean, I don't like to use the word resilient, but how do you stay sort of strong in those moments?
Yeah, I think that's such a critical question, Stephen. First of all, what I would want you to not do is to practice what my daughter called toxic positivity. So the idea that it's wrong to feel sad, it's wrong to feel down. There's nothing wrong. You have to acknowledge the emotion that you are feeling. What we want is to take hold of that emotion, acknowledge it, and then start a process of reframing the situation, trying to find meaning in what you're experiencing, even if it's tough. Sometimes I think simply shifting the focus can help us and find solution. But I think the first thing you want to do is just to acknowledge what you are feeling, name it in order to tame it is a strategy that you want to do. And then maybe just some ideas on practicing mindfulness, being fully present. One of the things I find is that, just that soft jazz music just to get my nervous system calm first before I try and tackle that problem is very important. And then seeking that social connection, talking to trusted colleagues or friends can provide that emotional support and remind you that you are not alone. And also, if you have a friend who can grapple issues with you, and if you are that friend as well, one of the things that you don't want to do if someone tells you the problem is not to be too quick with the advices or the motivational quotes or even the Bible and Quran verses. Before you do that, just listen, grapple with whatever someone is grappling with before you try with the advices. Sometimes all people need is just that space, that social connection to know that even if I don't know what to say, I am here with you.
Yeah, I mean, sometimes it's the most important thing, isn't it? Sipiwe Moyo, thank you. There's so much more to talk about on this. Sipiwe Moyo, of course, is the organizational behavior specialist. And things are changing quickly. There are lots of ways to deal with them.
The Money Show.
Consumer Ninja.
Well, good time to hear from Wendy Noli, your consumer ninja. I don't know. I mean, it's a bit like getting a cell phone. If you've ever read the small print in a car rental contract or not, it's like reading the small print when you get a new cell phone. I think very few people do it. And yet, if you look at it, some of it's really quite scary. Wendy, good evening. There are all sorts of things that happen.
Hi, Stephen.
There are all sorts of things that happen when you rent a car. You get different waivers. You even get separate waivers for windscreens and tires. And yet you can still find yourself in trouble.
Indeed. I mean, I've been reporting on the industry a lot because, a lot of people get caught out. One of the things I wasn't going to talk about this evening, but a very common one is they don't check the car properly before they drive off, and then they come back and then they get told that dent, you made that dent and we're going to charge you for it. And, then they haven't got any proof that they didn't. So always take pictures of the car, make sure every little imperfection is noted on the sheet, that kind of thing. But if you actually had to sit and read the small print, and I'm as averse, or I used to be before this job, to that boring tiny print. But I mean, I wouldn't have a job if people did read the small print in all their contracts. But car hire, I'm telling you, Stephen, people don't realize that they at risk, what risk they are at, because we have this waiver system. The industry doesn't insure all those cars. I mean, they couldn't. The premiums would be too ridiculous. So they self-insure, and then you, as a renter of the car, you limit your liability to pay for the repair of damages, or if the car gets stolen, whatever, with the waiver system. So if you take the normal waiver, you could be in for 25, 30,000, a lot of money, which could still set you back financially for a while. And then the super waiver is going to cost you more per day, but that's going to limit it to normally under 10,000 Rand, something that's a bit more manageable, or even under 5,000 Rand, right? But still, you've got to then take another waiver that covers windscreen or tires. And even then, as I discussed recently or reported on, it doesn't cover hubcaps, or they call them wheel covers now. And those things go, and they can cost. I had a recent case that cost the guy 4,500 Rand. Because all the covers were taken from his car in the Joburg Mall, right? And then 500 Rand, that included 500 Rand admin fee to process the claim. So it's money that you haven't registered for, right? But in this case, and then also, so you've taken the super waiver, you think, right, I've covered myself, great. And then you go on a gravel road and the waiver doesn't come in. You have to pay the full loss or the full repair. You don't have an accident with another car. It's just you hit a tree or something. Waiver doesn't kick in. It's all sorts of things. You were drunk. You didn't report it on time. all sorts of things. Okay. And that can ruin you. But today, right.
So I mean, there's a particular case about someone. She hired a car. She was in Cape Town. What happened after that?
Okay, so but in the scheme of things, in the scheme of the kind of cases that come to me, this is quite a minor one, Stephen. So she's only 23. She had a car in Cape Town. She's from Joburg. She had a car a couple of weeks ago. While parked in Sea Point, another vehicle lightly grazed the rental car. It's a Toyota Starlet. I've seen the photo. It's the most minor little fender bender imaginable. But, these things cost money. So she reported it. She got a case number. The third party accepted liability. But that incident cost her time and, as a result, money, because she was 20 minutes past the 24-hour period. That put her into the next day. So she was charged a whole 730 Rand for that extra day, or 20 minutes of it. And so that reduced her deposit that she was hoping to get back in full, the 3,700 down to 3,000 Rand, more or less. So now she's already not happy about that, but there was worse to come. So she did have the super waiver, so she was limited to paying around 2,000 Rand, but an assessment fee added 320 Rand, a claim admin fee 890 Rand. So now she owes them 3,300 odd for that fender. That was caused when her car was parked, right? So she ended up she didn't get any of her 3,700 deposit back, and she ended up owing them a few R100, 380 Rand. And she says, but this was not my fault. It's ridiculous. Please, please, please help me out.
So, I mean, okay, she did nothing wrong. She signed all of the waivers that she could. She still ended up losing quite a large amount of money. And, I mean, surely, okay, the company could argue the law, but in the end, she did nothing wrong. She's still out a ton of money.
Well, that's why I talk about these things, Stephen, because common sense and fairness tells you that can't happen, but it absolutely could happen. So I have already emailed the company. I hope to have good news for you next week. Say, look, you've done nothing wrong here, but I would argue that under the circumstances, she had this accident, it made her 20 minutes late, at least waive that 700 and something Rand extra fee for that day that she was pushed into, because someone didn't drive properly and grazed the rental car. So the advice is always be mindful of the time that you take possession of a rental car, whether it's 1 or 2 days, 3 days previous. If you took it out at 5 in the evening, get it back before 5 in the evening of that day, or whatever days you're taking, because 5 minutes after that, it's pretty automatic. You're going to get charged for another full day. And then it's car rental bumper season coming up with festive season. Just compare some of the terms and conditions. They're all pretty dire, mind you. At least read the exclusions, the kind of behavior or circumstances that are going to leave you without even the protection of the super waiver that's costing you quite a lot every week. Every day, rather. It's a daily fee. My advice is don't hire a car unless you absolutely have to, because things can be totally out of your control. A hailstorm, someone bashing into you while you're parked or stationary at a robot or whatever. And the liability thing, look, they might, go for the third party and eventually claw their money back and maybe come to you afterwards. But, there's no guarantee of that. You're going to be out of pocket and potentially for a very large amount. So just a cautionary tale, Stephen, on this one.
Yeah, and Wendy, very quickly, some people want to borrow cars from family or friends. You've got to check the insurance on that too if you lend your car to someone.
Yeah, I'd say it's a better idea, but all insurance policies are different. So some policies, if you, the family member, had an accident in a relative's car, they would still cover it. The relative will still be covered. And other policies, unless you phoned and told them, look, my relative's here for a couple of weeks, going to lend him or her the car, unless you told them there's been no cover. And some policies are so strict that unless anybody that gets behind the wheel for any reason, unless they're actually named in advance on the policy, they don't get, there's no cover. So just be careful there as well. Lots of careful, Stephen, always.
The Money Show.
Shapeshifters.
Well, it's not very often that someone who holds a high position, a difficult position, if I may say, a very difficult job in our society, in government actually agrees to join us for this conversation. So I'm very pleased to be able to welcome for you tonight Duncan Pieterse, the Director General of our National Treasury. I should call him Doctor. I should probably call him Professor as well, but I'm going to ask him, Duncan, good evening, if I can call you Duncan. Thank you so much for agreeing to speak to us this evening.
Thanks for having me, Stephen, and good evening to your listeners. And Duncan is perfectly fine.
I'm going to start by asking where you grew up, what kind of family you had while you were growing up, what kind of experience you had. You would have been growing up in a country that was undergoing fundamental difficulties and fundamental changes.
Yes, so I grew up in Cape Town, in Kuils River, which is sort of on the edge of the Cape Flats, as it were, in a family with two parents who were both teachers. So both of them remained teachers for a very long time. And I went to school in Kuils River and eventually high school in Cape Town at Harold Cressy.
Okay. And having two parents who are teachers, so, I presume maybe spending long careers in government service. Did you think you might be in government? Was that something that people thought about at the time?
No, I don't think so. I mean, certainly none of my friends and I sort of envisaged, certainly not, as you can imagine, in the 80s, that one day we'd work in government. But I do have two parents who were teachers, two aunts who were teachers as well, and many cousins who are still teachers today. So there was always an element of public service, I guess. So that was always part of the environment growing up. But certainly late 80s, early 90s, that wasn't something that we considered even one day doing.
And growing up, I mean, you must have known, and people around you and your family must have known pretty early on that you were someone who was pretty good with the school books and probably pretty good with the numbers, I guess. I mean, that must have been pretty evident.
Well, to be honest, Stephen, I'm not as smart as my two siblings when it comes, especially to performance at school. But academic sort of excellence is something that my parents always prioritized. Part of the reason I ended up at Harold Cressy High School was because it was one of the schools that was known back then for its academic excellence and for the quality of the teachers. So it wasn't a school that was known for sporting or extracurricular activities at all. It was an academic school essentially. So it was something that my parents had always prioritized, and I guess I benefited from their attention to that area.
So you're now sort of in matric, early 90s. I think you and I are roughly the same generation, but grew up in different parts of our society, and things were very different then. I mean, what options were sort of available for you as you were finishing school? What were you thinking of doing? Did you have any idea of what you might go into?
Yeah, it was clear for myself and my siblings that we would end up going to university. I was fortunate, enough to be able to be accepted to UCT at the time, and my parents really encouraged me to apply, and eventually I got accepted for a business science degree. And like many people at that time, I chose a business science degree with a finance or a chartered accountant speciality, but very quickly realized that accounting was not something that I particularly enjoyed doing, and I found economics along the way. Unfortunately, a business science degree is sufficiently flexible that it allows you to change along the way without compromising the number of years you take to do the degree. And I then switched to economics, which was something that really aligned with my interests. So I really enjoyed doing it, and I ended up having a great time studying that.
I mean, I was lucky enough to sort of discover journalism, history to an extent, but journalism really grabbed me, and I've always thought that gave me direction in life, and I was very lucky compared to other people of my age who I know. Did economics give you direction? It sounds like maybe it did.
Yes, it did. I think, it's a social science, but with a very large quantitative focus. And especially as you advance your studies in economics, particularly once you start doing postgraduate studies, economics becomes very quickly quite quantitative and technical and mathematical, as it were. But because it's a social science, it always has a lens on solving big social problems. And so that, I think, fit quite well with my interests and my own my own background, and I ended up enjoying it quite a lot.
Well, 2 master's degrees, one at UCT and one at Harvard. I mean, that's astonishing.
Yes, well, I mean, along with the academic excellence that I think my parents instilled was the idea of lifelong learning, and I was very fortunate that at the Treasury. That is also something that is supported. So I was given quite a lot of support, both by the minister at the time, Minister Mboweni, and the broader Treasury family, to be able to go abroad and do my master's at Harvard, which was a very special experience.
So, okay, you're going to have to go back a little bit. How did you end up at the National Treasury? I mean, how did it happen for you?
Well, in my case, Stephen, I worked for a few years in different roles, mainly in development economics and in public finance, with people like Iraj Abedian and Tanya Ajam and others that have become experts in their own right. And then I went back to do my PhD, and I did it full time. So I went back to UCT and did a full-time PhD. And while I was there, I was able to benefit from UCT's broader networks globally. I spent time at Brown University and at Yale as well while I was finishing my PhD on research fellowships. And when I came back, armed with my economics degree, I wanted to work as an economist in the public sector. And there are very few places as, I think, known, but also with the kind of prestige as the National Treasury. And I think I graduated around June or July, and then immediately applied for the first job that I saw at the time, which was in the Economic Policy Division at the National Treasury, which was headed up at the time by Fundi Chazibana, who's now a Deputy Governor at the Reserve Bank. And I was fortunate enough to be hired. So by September of that year, after having graduated in June, I started at the National Treasury in the Economic Policy Division.
Sure. When you work in a position like that, do you feel now, but did you feel then, was the fact that this mattered, that this was something that mattered, was that part of the attraction? There are plenty of jobs that matter, but the National Treasury, matters.
Yes, I think so. I think you really get a sense that working at the National Treasury is an enormous privilege. And it's a privilege because, as you say, the work that you do matters enormously. And it's quite wide in its scope and in its breadth. And also, of course, the caliber of the people that you work with, your fellow public servants and those that work at the National Treasury, their dedication and their work ethic and so on is quite exceptional. And I think the combination of the work we do, the caliber of the people we work with at the Treasury, certainly gives it a sense that you are doing work that matters. And of course, beyond that, you are in a very privileged position to be able to serve the public and to be involved in policy discussions and debates and make contributions that ultimately you hope leaves the country in a better place as a result of your work than where we've come from.
Duncan, I'm going to ask you a little bit about that period from sort of 2015 to 2017. And let me just tell you what I remember covering it as a reporter from outside. Nhlanhla Nene was fired. Des Van Rooyen sort of didn't survive the weekend. Pravin Gordhan came in. He was then fired in 2017 by Jacob Zuma, who was president at the time. Malusi Gigaba became finance minister. And I remember so clearly how Malusi Gigaba discovered that while at a fashion show. I remember going to his press conference the Saturday morning after that. It was a very tumultuous time for the country, and I was covering it from outside the National Treasury. What was it like inside the National Treasury? It must have been very difficult.
I think, Stephen, the one benefit of working at the National Treasury is that we deal quite regularly with a lot of complexity. I think our work is both technically complex, but also quite politically complex, as you can imagine. That was a particularly tumultuous time, but I think there's a certain resilience that is gained when you work in an environment as complex as ours, that helps people to navigate these kinds of difficult periods quite effortlessly. I do think that it certainly was a difficult period, and I think for all of us, all we wanted to do was to get on with the job. But it's really great that we were able to come through that period and survive with the institution intact. And I think that's the main sort of lesson for me, is that the institutional strength of the Treasury is such that even during such difficult, politically difficult times, the institution can remain intact and come out thriving on the other side.
I mean, it's amazing how things have changed. You now have a minister and a deputy minister from the ANC and another deputy minister from the DA. I mean, you talk about political complexity. I don't know if that's made a big difference to policy. I mean, policy is inherently political. But still, I mean, that's a big change too.
Yeah, I think our starting point, Stephen, is always the technical quality of our work, whether it is evidence-based and whether it meets the kinds of standards that we set for ourselves. But as you say, fiscal policy in particular is inherently political. And so our job is to deliver the best possible technical work we can, and then leave it to the minister and the deputy ministers to do the political work to get that technical work across the line.
We're talking to Duncan Pieterse tonight. He's Director General of the National Treasury. He's your shapeshifter this evening, with us all the way through until 8 o'clock.
The Money Show.
Shapeshifters.
Your shapeshifter this evening is Professor Duncan Pieterse. He's Director General at the National Treasury. Duncan, one of the fascinating things during this segment is we always ask people, what do they do for fun? And I've come to realize that for a lot of CEOs, that's actually the hardest part of the conversation. I think there are various reasons for that. A lot of people will give me the answer that they will spend time with their family, and I completely understand that. Some people will say they do a little bit of exercise. Some people say that they cook. Some people say if they can, they travel. Do you fit into one of those categories, or do you have something else that you do for fun? I can't imagine what your phone and your WhatsApp stream is like, but when you get a moment, what do you do for fun?
Well, Stephen, in my case, it's a bit of all of the above. I really enjoy cooking. It's something that sort of came to me quite late in life, but I absolutely love it. I am an avid runner, and that's one of the ways in which I sort of decompress and I plan for the day and so on. So that's something that I do. And I do try to travel quite a bit. I do take 1 or 2 proper holidays per year, and it's something that I do encourage everyone that works at the National Treasury to do. Just given the nature of our work, it's so important to maintain a proper work-life balance. So I'm one of those people who do try to, and I have been able to, for the last few years, every year go away for 2 or 3 weeks and just completely disconnect and spend time with family abroad and then come back refreshed.
I mean, I've often thought that if you're deeply involved in South Africa, as you are, and by deeply involved, I mean in all of the sort of mechanics of it, at a very high level, leaving the country and coming back actually makes you much more effective because you just see things from a different point of view. Yeah, I'm sure you've come across that.
Yeah, I couldn't agree more, Stephen. I think traveling abroad has 2 real benefits from my perspective. I think the one is that being away from the daily agenda and the meetings and the work that you have to do, I think that break is quite important because it gives you immediately a very different perspective and allows you to engage the work very differently when you come back. And then of course traveling in and of itself has the benefit of being exposed to the ways in which other places and countries and governments do things very differently. So as a civil servant, when you are abroad, whether it's in China or France or the US, you are always noticing the ways in which other governments make things work. And I think those things often then allows one to come back and approach some of the same problems that you've seen back home with a different lens.
I've heard from one of your predecessors a while ago now, who suggested that, in fact, doing the job of Director General of the National Treasury was something you could only do for 5 years. And I know plenty of jobs like that, where actually it's not something you can do forever. And I mean, it may be too soon in your tenure to sort of ask that question, but can you understand that sentiment? I mean, is that one of the jobs? I mean, I would suggest that, I mean, we used to joke about the toughest job in the country being Eskom CEO. Things have changed a little bit now. But I think doing what you're doing, it may be deeply satisfying. But is it something that actually people can't do forever in normal cases?
Well, I think it is a job that does take quite a lot out of you. But I think a lot of jobs do that. And I think there are many other roles, at the Treasury that are similarly difficult and take quite a lot out of the individuals who work there and in other contexts. For me, one of the principles that informs my own sort of leadership philosophy is that a successful leader is someone who makes themselves redundant over time. And that has less to do with the pressures that a particular job exerts on an individual and therefore the tenure associated with that job, but a lot more to do with whether it is wise to stay in a particular role for too long. And I do think something that all leaders have to do is to focus on making sure that they attract and retain the best talent, allow those individuals to get on with it, and then at some point, having done the right kind of succession planning and pipeline building, step off and embark on a new challenge.
We're in an interesting phase in South Africa. There's a lot of change happening. Some of it's been political. There are other things happening, and we're also in a kind of, hopefully, an inflection point where our economy starts to grow again. And that means that sometimes a small shift in one direction or another, or a small change in the way that government or a government department works, can actually have a long, big impact over a long period of time. And I wondered if there's anything that you can see that we actually need to focus on right now that maybe is missed in the national conversation. I suppose by national conversation, I mean, are journalists like myself on The Money Show, is there something that's being missed that actually we need to pay a bit more attention to, or something that you think we need to nudge it in this direction? And if we nudge it just a little bit in this direction now, as the boat shifts in direction over time, we'll find we've actually traveled a much better course. I mean, is there anything that you see that's missing from the sort of public national debate that actually we need to focus on a bit more?
Firstly, Stephen, I think you're absolutely right that we are at an inflection point, that the opportunity for a positive sort of economic narrative and a fiscal narrative to emerge is enormous. Certainly, in the work that we do, we can see that. We can see that there's a renewed sense of optimism. There's a renewed sense of positivity about, in particular, in our line of work, the fiscal future of the country. Secondly, I'm not sure that there's anything in particular that we are, that the journalists or the media in general is missing. But I do think what's going to be critical for South Africa over the next few years, and this is something that the Minister of Finance has been talking about for some time now, and I think we're finally making steps in the right direction, is the importance of prioritizing infrastructure and public investment. And I think if we can shift the dial on that in the next few years, in the way that we've outlined, for example, in the medium-term budget policy statement, and the government spoken about more generally, then I do think we could have a very, very different growth trajectory, but also a very different economic future a few years from now.
Duncan, thank you. Not everybody in your position would agree to do an interview like this. I realize it's difficult and there are things you can't say or that you need to be careful of. So I really appreciate the time. Thank you.
Thanks, Stephen.
Duncan Pieterse, I should say, Professor Duncan Pieterse, of course. He's the Director General of the National Treasury.